Hello everyone and welcome to my weekly update with me, Richard Perry, Market Analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've got two key central banks which are reporting monetary policy. We've got the Bank of Japan and we've got the ECB, and the markets will certainly be focusing on these two crucial events. Will they signal a move towards a little bit of a more tighter monetary policy stance than they have done previously, and subsequently follow the dollar down the hiking interest rates path? Certainly too early, I think, to say in terms of hiking interest rates. However, the markets could start to sort of see a little tweaking of the language, certainly from the ECB and perhaps even from the BoJ. But again, the expectation is that perhaps it is one meeting possibly too early for this. I think more into the sort of Q2 maybe for the ECB, and possibly even later into the year for the Bank of Japan. But there is always that possibility that they could be a surprise. Unlikely though, given how dovish those central banks have been previously, and certainly given the fact that Mario Draghi, for example, remains fairly tight on the reins of the control in the ECB Governing Council. But the rhetoric from the Governing Council members is increasingly hawkish. Again, though, I think it is slightly too early, and we might see, with the market so strongly net euro long on the CFTC futures, we could see a bit of a retracement on that strong euro dollar move that we've seen in recent weeks. That's pushed euro dollar out to sort of 3-year highs. Again, will we see some bit of a retracement on the yen, which has been strengthening as well? So that could mean dollar yen pulling higher. But these markets are fairly finely poised moving into these meetings. Fairly sort of consolidating on those market data points on Monday morning, and it'll be interesting to see how the week develops. But certainly at the moment they are fairly well set up for further longer term gains as these central banks start to push more towards a tightening cycle rather than necessarily sort of starting this month. In terms of your sterling trades, it'll be interesting to see how on cable, it'll be interesting to see how sterling continues to run higher, because you've got increasing signs that we're getting a little bit more of an amenable sort of outlook for the Brexit negotiations. We've got sort of more positive signs from President Macron out from France over the weekend, and that has helped to sort of maintain this momentum that sterling has had in the early part of 2018. Now, in terms of where your indices are going, well, you continue to pull strong all-time highs on the S&P 500. The US government shutdown might take a little bit of the shine off that move to the upside, but at the moment it's not expected to be too much of a negative factor. Certainly, if the politicians can get their act together and come up with a compromise deal, then it shouldn't have too much of a problem at all for equities. But the into earnings season, which is progressing fairly positively for the States, we continue to see strong gains. Now, in terms of your European markets, we've got the DAX, which has turned higher, and the FTSE 100, which on Friday also had a strong move to the upside. Is the FTSE now being able to sort of turn around a corrective move? It certainly looks as though a bit of support has started to come in around that sort of 7,700 area. And for the DAX, we've seen a breakout to multi-week highs. Can it test that all-time high at 13,525? That is the key factor for this week. In terms of your commodity markets, you've got the dollar, which is or has been weakening, which has helped to support these commodity prices. Now, will that dollar weakness continue? Certainly at the moment there's a bit of consolidation we're seeing on the gold price and also oil, and it's interesting that this is coming around the time of which the dollar has started to sort of show a little bit of consolidation as well within the selling pressure. Now, will that just be a consolidation that subsequently continues to the downside? I think on a medium term basis, yes, but near term the dollar looks a little bit stretched and could be due a technical rally at some stage, which could help to give entry points better for some of these commodity markets, such as gold, maybe around that 1300 area, and possibly oil back a little bit after such a strong run higher that it's had. So generally speaking, we're looking at these monetary policy decisions throughout this week, but you do also have some other announcements as well. You've got the UK unemployment and wage growth. Now, wage growth will be key considering we saw inflation just starting to tip over the edge on last week's announcement. Will we start to see wage growth start to improve? And that could help to take the pressure off the Bank of England from hiking for negative reasons. Maybe they could sort of look towards a more positive outlook due to positive economic reasons, being wages coming up higher. So that will be something to look out for. But we're also looking out for flash PMIs for the Eurozone in the States. And towards the back end of this week, the big focus will be on growth. For Q4 2017, we get the first look at the UK economy and the first look at the US economy. How did those perform in the last quarter of the year? That will be the big focus on Friday. So still a lot to go on this week, and I wish you good luck in your trading, and I'll speak to you next time. Thank you.